Hello everyone. Today's topic is transfer pricing, whether it is a tax planning tool or a compliance burden. When one talks about transfer pricing, the first things that come to mind are transfer pricing study report or the documentation. For many, transfer pricing as a subject revolves around documentation and meeting the compliance timeline, but seldom think of it as an instrument to effectively plan taxes or structure transactions. Through this video, we aim to highlight a different facet of transfer pricing, which will add value in terms of effective structuring and planning exercise. Taxation needs compliance with provisions and rules made therein. Income tax returns or declarations are the classic examples of a compliance. Although a person pays taxes through various means, such as by withholding tax provisions, advance tax provisions, and self assessment tax. One would have to formally declare the income earned in the financial year, calculate taxes as per the rules and regulations of the taxation law, and file such declaration by the due date mentioned in the statute. Similarly, the transfer pricing regulations require compliance in terms of maintaining the arm's length nature of transactions. Let's take an example. When we take a family holiday, we plan the places to be visited, gather ideas about the places, finalize modes of transportation, collect travel insurance, and etc. And eventually we proceed to take the actual vacation. Likewise, why not do the same for transfer pricing? You have set up subsidiaries across the world, have intercompany transactions on a daily basis, and make decisions on these transactions, like the logistics of storage, manufacturing, selling, and distribution. But at times, we forget the most important function for which the business thrives. For example, pricing. Good planning is half work done, and hence establishing transfer pricing for the transaction or even before the transaction is important. So, following are the summarized benefits of planning transfer pricing prices. First, it creates certainty. Testing of transfer prices post closure of books then acts only as a post facto analysis, documenting past details. A simple step, such as performing a preliminary transfer pricing analysis, would help to cover the situation. Second, it smoothens transfer pricing audits. The transfer pricing officer gets a fair idea about the process of price setting mechanism through documents such as transfer pricing policies and intercorporate agreements, which are an integral part of planning process. Once the science behind the transfer pricing model is explained, the process of an audit is simplified. Third, it helps achieve effective tax rate. Planning of taxes is a legitimate process, unlike avoidance or evasion of taxes, with aspects including intercorporate financing, intangible property, and intercorporate service agreements. The management of a multinational group would like to manage taxes to reduce the overall tax burden. Finally, globally, transfer pricing is treated both as a compliance measure as well as an excellent planning tool to bring down the effective tax rate. It is up to you to choose whether to use this as a planning tool or merely compliance. In our opinion, the sooner you shift to planning, the sooner you will have improvised control on pricing. Hope this session was useful. You can reach out to us at the following details mentioned. Until then, zooming out.